And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, July 14th, 2022. The NASDAQ, along with the S&P and the other markets, continue to form a fourth wave triangle pattern, at least here in the NASDAQ and also in the S&P. And as I have been discussing, the market appears to have completed waves A, B, C, and D, with an E wave still underway. And what the market tended to do today was a little bit all in line here in the NASDAQ, but a little bit different in the S&P, but still triangle pattern. And so here's what we are where we are. So wave D did end, in my opinion, at yesterday's low at 14,779, I believe actually the low was, and then launched up into an E wave, where then we had A of E, B of E, and now we're in the C wave of E. And this continues to project out for us on the Fibonacci basis to get to 11,845, which it nearly did this afternoon, and as high as 11,932, we'll call it. And E waves can spike like this one and this one. Those weren't E waves, but waves in a triangle can just suddenly spike. And that still could happen here to complete this E wave, in turn also to complete the minor fourth wave, set the stage for the beginning of a minor fifth wave down. Now, what's kind of holding this to task is that we started earnings with JP Morgan, Morgan Stanley today, both coming in a little bit light, but didn't seem to bother Morgan Stanley's stockholders and traders. They continued to turn that and decided to pump it up. JP Morgan also came up off the bottom, was down 5 or 6 at one point, closed down just above being down 4, so down 391. Goldman Sachs kind of took it on the chin because they're yet to report. They may have come out after. Let me just double check. No, they report on Monday. So here we are. Bank earnings have come out, and then PPI came out, and it was almost like nobody cared. Now, one of my subscribers did tell me that. There's PPI, nobody will care. And I'm like, really? They should, because it, like the CPI, has also increased. But they show you this core number first. So it's just supposed to come out at 5, and it came out at 4. It's like, okay, so if people are trying to do with that one. But then the overall year over year PPI showed that increase. So inflation is still untamed, on the rampage, moving quick. And now, of course, we've got some pundits and et cetera coming out today and talking about that now the Fed is faced with doing a very large increase, a very large hike in interest rates. And I'm like, wow, did that author listen to what I've been talking about, telling people to go back and take a look at Paul Volcker's work in 1980, 1981, when he became Fed chief under Reagan and jacked up interest rates, and did say why, and did say it's not going to be fun, but it worked. And that's the more important thing. And interest rates came down. And from 1981, they came down through 2021. So for 40 years, we had a lower interest rate environment, just constantly walking rates down, 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 until we reach those bottoms in rates, highs in yields, highs in bond price late last year. So the news is out. We're really probably going to have to deal with much higher interest rates before all is said and done. But that doesn't seem to really be hitting a lot of the algorithmic firms, which again, went after Apple, went after AMD, went after Microsoft, which was down early in the day, decided to turn tail and run to the high ground. So again, I just think that most of this is tomorrow's expiration, folks, tomorrow's retail sales numbers. So again, I think we'll have this dichotomy going. It's like, what do we pay attention to? Retail sales or today's expiration? The bigger traders, retail sales, today's expiration. They'll do today's expiration first, and then they'll look at retail sales and the CPI and the PPI, et cetera, et cetera. But I believe that there's just a lot of unwinding that's going to take place, but they've got to get it to the price where they can do it. And so a lot of these individual stocks. In Apple Computer, I'm still thinking 150. They continue to push for that. In AMD right now, it's appearing that it could be 79 or 80. Let's see if they can get it up there. Google, tomorrow at the close, that's it. We find on Monday, Google will be trading at a similar price to Amazon. 110 to 120, somewhere in there, I believe Google will come out. But where are they going to close it tomorrow? Because that's where things will be changing hands. So a lot of stock will be changing in Google, those that don't care about that and they just want out, et cetera, et cetera. So we've got a lot of stuff going on that will ultimately affect tomorrow's expiration and then some. So I think we're just starting getting into these fireworks here, but we need to complete this triangle pattern first. So how that all fits in and plays out would suggest to me that we're probably pretty close. Now, what I want to do is I want to put up, we're just going to take a look at this E wave now. And that's all right here. This is all part of the D wave. This is the E wave. It started right there. Up to there, down to here. That's the A, the B, and where can this C wave take us? Check it out. Right between the 11,845, which is where we almost got to today. That's a double up there. We have 100% where C would be equal to A at 11,896, almost 11,900. Do I think that the market can get there tomorrow at some point? Yes. Will it expire there? I don't know. Maybe. But if it does, I believe they'll go for that cushion to get it above so that it closes above there. And all these stocks do. So a lot of it'll be a push and a tug and a pull. But 11,900 to 931 is where I am now going to be looking for wave E and minor wave 4 to call it a day. Now, could it totally just expand and go similar to what we saw here? It could, and it could do it in retail sales and just in expiration. Apple was in control again today. And if we went down and we looked, there were a few others that kind of played out. NVIDIA is in there for tomorrow. Tesla is in there for tomorrow. Got a lot of stuff. And these are like the top 5 to 7 to 10 of those components that produce a lot of these big moves when you're looking at whatever, there's so many other things are down. So for tomorrow, I am looking for completion. And it may be, I'm not sure exactly how it's going to go, but it should, because we're in the C wave, it should be 5. Let me open that up and let's take a peek at what we got so far. 1, 2, 3, 4, 5. Could this be over before it even gets started? I don't know. We will have to wait and see. In other words, I could do this overnight, get it up here, hold it, and then we open and boom. So maybe retail sales will be the top. I don't know. We'll see how it plays out. But I'm looking for this to finish up. We're finishing up the 4th wave, and then the next move would be down. Whether that has an opportunity to start tomorrow, yet to be determined and seen. I cannot predict exactly what these stocks are going to do and when they're going to do it because it just doesn't make sense. So that's what I'm looking for. And then I'm looking for downside. If this gets up here overnight and retail sales and everything else kicks the next one into gear, I don't think it'll be an easy way down. If it's a forced, absolutely get out of my way, we're selling down, not make any difference where this is. And it will force massive adjustments. And we've seen this story before. We get one of these, and it's nothing more than they're dropping through so many strike prices in Apple, so many strike prices in AMD, so many strike prices in Microsoft, Meta, all of them, Tesla, that adjustments because it's expiration and volatility will be jumping all over. So now, once complete, I'm going to start taking some of these off because it gets a little clogged in there. If the market gets up here and starts to turn, we will be looking at the 50, we'll be looking at the 20, at the 8. We'll be checking it out. If it gets above the dual 200s, the SMA and the EMA, which actually continued to go down for part of today, and then kind of leveled off. And now it's just kind of sitting. And this one still had a little bit of upward slope. And then we had the 4, the 20, and even the 50 turned up with once the market got in gear and started to cross back above 11,700, 11,800. And we picked up some steam and then we brought in some momentum. So that all would need to break. What's going to be our clue? Of course, again, here we are, 11,479. That's one area. I'm going to go back out to that daily chart just for a moment to pull up some additional levels. A break below 11,479 does begin to seal the deal that this fourth wave is likely complete and we're now beginning the next leg. Don't forget, once this triangle is complete, the action of that is that it will thrust out of the triangle back in the direction of the trend. Well, the trend is down. We're looking for a minor fifth wave down. So when it reaches this, we'll know because it'll turn and thrust lower. And that thrust should carry us below 11,479, 11,351, and then 11,068. All of these should be broken. These are price support areas, not strong, just there, markers, and along the way. And then 11,068. Again, we have this area. Once it gets going, I will put it on. But I need the completion point of wave 4 so I can put in from wave 2 to wave 3 to wave 4. And put that all in, and that'll give us a much wider area for this minor fifth wave to come into. But we got to get there first. We got to get to that completion point. So tomorrow, I am going to continue to look for the completion of wave E. A little bit easier to trade today, not quite as difficult, not quite as choppy as it was yesterday. But nonetheless, it kind of went through its periods where it was pretty slow, et cetera, et cetera. Upside, finish of wave 4, excuse me, and then an abrupt turn, a thrust out of the triangle. That's what I'll be looking for. Now, our next update will be on Sunday, July the 17th.